The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the August 1st, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, if you're inside the Tiger's Den, well, then any ping will do. So let's go ahead and get this show started on fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day with something other than a mixed bag. We've got all the U.S. indices that are trading to the downside. Got the Dow off 559 points, about 1.25%, 1.5% for the S&P, 98 points, 1 7/10% for the NASDAQ 100. That's a 405-point move. 2 3/10 for the Russell, 51 points there. 2% for the semis, 108 points. 2% for the NASDAQ Composite, 427. New York Stock Exchange down 240. In fact, that's where we're going to begin our day. We're going to take a look at both the Spot VIX Index as well as the New York Stock Exchange Advanced Client Oscillator. Why are we doing that, Stevie? We want to understand its conditions, not just now, but we certainly want to understand this come day's end. This being what, Steve-O? Well, if you take a look at the bottom left-hand side, you'll see that on a daily basis, the Advanced Client Oscillator is below the minus 150 level. We have just entered oversold territory. Now, markets can get more oversold. That next blue line would be the minus 250 level out there. But we are now in oversold market conditions. The New York Stock Exchange itself is trading below right now the swing point of July 16th. That's at 2277, and a close below that would suggest that 2008, the TD9 count breakout level, would likely be a target to the downside. To the upside, we have the Spot VIX Index that is trading higher by about 20%. A one-day rate of change generates a signal that we should see a bounce or bottom come Sunday, early Monday morning out there. Of course, we still have to get the one-day rate of change about plus 10%. We are trading well above the 50-day exponential moving average, which is 1797. Now, we can see that the Spot VIX Index has rallied up into TD9 count breakdown resistance at 2055 out there. So we've got the potential for at least for a rally come Sunday, Monday. Now, this could all go away and the Advanced Client Oscillator get back above the minus 150 level at day's end. Don't know, but you need to be aware of it. So we just made you aware. Perfect. I'm going to go ahead and close out this chart and just free up these resources. Where are we going to go to next? We're going to go take a look at the daily equity future contracts. That's where we're going to go. So in a moment, we'll have those up on our screen. And as these pull up, we're going to see the ES Mini, which is right now testing. It's trading below, but in essence, it's testing its breakout level. That's at 62.88. If we close below that, we likely head lower. However, caution Will Robinson. We haven't had a 5-day consecutive decline, which is what today would be with a lower close, since January the 2nd out there. You see, on January the 2nd, I don't know if we were overbought or anything like that. We did get at least a 2-day rally. Excuse me. I would expect at least the same thing. What happens if 62.8825 holds at day's end? well, then that could be a bottom. You and I have looked at plenty of charts out there. We know that getting back to the breakout level can, in fact, be a bottom. You break through it, different story. Of course, this would just be one day below it. If you get back above it on Monday, close above it on Monday, that would tell you it was a false breakdown message out there. If we take a look at what's going on inside the NQ has found support at its breakout level. Remember, a bottom can be just simply getting back to the breakout level. A top can be getting back to the breakdown level. 22,803 is the number. We've been down to a low today of 22,800. If we take a look at the Dow Equity Future Contract, it is trading below all support levels out here. Where's this headed to? For this, we would need to go take a look at the weekly time frame chart, which we'll do. Here we can see that the Dow, the last time that it traded lower by more than 4 consecutive days was back in December of 2024 out there. So, doing a 5-day consecutive move tells us about a potential change in character of the market. But we need other things to go along with that. We need to see what happens with an oversold rally. The Russell 2000 finding support in its buy zone. Now, buy zone is between 2162 and 2188. If price were to close below 2162, that would then suggest a run for 2089. Now you'll see Perigee pivot points that are out here. Those go away basically today at 4:45 p.m. That is when the moon comes in at apogee. That's when the moon is furthest from Earth during this current lunar cycle. Now, you'll be able to get the ES mini futures. You'll be able to get the futures, and you're going to mark that data point out there. Whatever the ES Mini NQ are trading at 445, that's what you would mark as your apogee pivot point. For cash indice type things, for stocks, it's probably going to be today's close versus Monday's open or Sunday's open, depending on whether you're looking at futures out there, with this close being at 445 today. What do we want to take a look at after this? Oh, if we take a look at everything? Yeah, I think we have. What do we want to take a look at after this? After this, why don't we go take a look at this report that I put up. Somebody in the den posted something. I wasn't aware of it. I am aware of it now. And that is a ETF for the Mag 7. The Mag 7 being NVIDIA, Google, Amazon, Meta, Microsoft, Apple, and Tesla. And that's what is included in this index. The best that I can tell, it's an equal weighted index out there. Now, what you're going to see is this confirmed a TD9 count top yesterday. It's completing that pattern today. Prices testing support. And support here is between the level of 56.74 and 57.08. Price would have to close below 56.74 to then suggest, where there is not a top, by the way, on the weekly time frame, not a topping pattern, but the pattern would be prices testing a swing point from back on December 20th that had 15 million shares. We are trading it this week with 8 million shares. So we do have a test and rejection of a swing point on lighter volume. Does that mean it's a double top? Absolutely, positively not. Why is that, Steve-O? Price is still trading inside that swing point. You've got to bust below the real rejection would be trading below the low of that candle session, and that's down at 54.64. And that's really where you also want to see the test and rejection on lighter volume. So you've got step number one, but we've got support here on the Magnificent 7 ETF index at 55.46 on the weekly time frame. What else do we want to look at next? Well, we've got about 2 seconds before we start to hear the music, the Pied Piper sing. But if we take a real quick look at the day trading charts out here for the it's the Russell 2000 that's up on our screen. TD9 count bottom pattern is completed on the 5-hour time frame. I believe that is 2 p.m. this afternoon. And the other bottoms, many along the bottom row, 60, 30, 15, and the 10-minute time frame chart. We come back to this break. Let's go look at the 60-minute charts for the equity futures. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So if the question is the bottom in for the day? The answer to that question is it may be. And it may be because each of the 60-minute time frame charts for the equity futures do have bottom patterns. As an example, the ES Mini completed a TD9 count bottom as we were coming on the air. So the key level of support to the downside would be 62.43.75. We close below that, we likely head lower out there. Now, the key resistance to the upside is going to be that red oscillator and change line. It is currently printed at 62.93. Now, that number is going to go up and down. If there was a snapshot of any charts that I would take of Stevie's screen today, I would say this is it if you're trying to understand the message of the market out here. So we should get a bounce, and we should get a bounce to at least that oscillator and change line around 62.93. Above that, we have profile resistance. Now, it may change throughout the day, but right now you got to go with what you've got. And you've got the sellers, used to be buyers that were at the 63.02 level, 63.16 and 63.30. If you look at the NQ, it also completed a TD9 count bottom pattern at 11 o'clock. It has its first level resistance around 23.022. That's its oscillator and change line. If it can clear that, you've got 23.060, 23.119, and 23.207. But just clearing and closing above the red oscillator and change line will tell you about a little bit of a change in character of this morning's market out there. The Russell 2000, well, as long as we don't get a lower low between now and 12 noon, we will have a wave number 7 bottom. That is letter G, part of the Chapman wave out there. Its oscillator and change line isn't too far above where we've already traded to this in the last 20 minutes or so, and that's up at the 43,770 mark, 43,770 or thereabouts. Above that, 43,833, 43,880, and 43,974. Those would be your resistance levels there. You close above those, you should see a further rally. And then finally, the Russell 2000, much like the ESNQ, completed its TD9 count bottom pattern at 11 o'clock. Price should rally up towards 2176. If it can clear that, then we're looking at profile resistance at 2184, 2192, and finally 2200.30. So the bottom may be in. The NQ, the low that you're looking at, let me give you those patterns out here. The low being 22,800, even Steven. Inside of the Russell 2000, the low being 2146.80. And if we tick below the low from the Dow at 43,464, the wave 7 signal would vanish and go away. Key here is going to be the oscillator and change line. No idea whether price will be able to clear that. If it doesn't clear that, it's just been a little bit of a relief from the sell-off this morning. But do remember, pay attention to the spot VIX index. As it closes the day, pay attention to the New York Stock Exchange, the advanced client oscillator. Those are going to be key elements to help you identify what the market is communicating to you and I. Let's go to our first request, which really came in yesterday. Stevie seemed to have botched it a few times, so I'm going to try to not botch it this time, if that's possible. And that was to take a look at KGC, and this was for Rich. So, Rich, pulling up the charts up on our screen here. Now, we've got multiple time frame charts. I believe you were looking for an entry point, which is why I've got these charts up on our screen. As I had mentioned, that the monthly time frame went ahead and formed bar number 8 of a TD9 count top yesterday. That says we could get a TD9 count topping pattern between yesterday and the next 2 months. How are we going to know? Well, we're going to get a topping. We'd have to get a topping pattern on the weekly time frame, which negated its TD9 count top last week out there. So there is no topping signal at the moment. What KGC needs is a bearish reversal candle for its weekly time frame to confirm a top there. On a daily time frame, prices traded into a swing point from July 22nd that had volume of 22 million shares. So far today, in a little less than 2 hours of trading, we're at 6 million shares. That's about 18, 19, 20. We're pushing with pretty nice volume above resistance out there. So it does look to me like KGC wants to go test the 1652 level out there. With regard to the other time frames, I really don't have much other than a 15-minute. I don't have much. In fact, I've got, when I say I don't have much, I have so little, there's nothing really for me to talk about there. So, Rich, thanks for waiting an extra day. I hope that helps you out. Glenn wants to take a look at Roblox. RBLX is the symbol. Where did Stevie put that? Here we go. So we take a look at Roblox out here. Let's let these charts here populate. Today, so I don't have a topping pattern or anything along those lines. What we do have is obviously price gapped up yesterday, pulled back during most of the day. We've gapped down now. All we're doing is testing the daily green oscillator and change line. And that is at the price point on a daily basis of 128.06. There's a new profile attempting to form below price. Glenn, that is a bullish signal. That doesn't mean that price can't get down there, but that is a bullish signal. The top of that profile being 124.94. The weekly time frame has an A to B equals CD pattern to the upside. That needs a bearish reversal candle. However, there's a wave number 7 signal, and the only way that that gets confirmed would be a lower high next week. No idea whether we're going to get that or not, but no other topping signal. The monthly time frame chart does have a potential of a double top. It is testing its swing point, or it did test its swing point, I should say, from November of 2021. That had volume of 645 million shares. It was tested and rejected with 195 million, but we are still inside that swing point. So hard to say. That's kind of weird, this chart here. Why is it still in July? That's weird. That's August. This is August 128.72. So the weird monthly chart on this screen right here. We'll have to see if that is the case on the others out there. Okay, so that's Roblox out there. Mike, I hope that helps you out. Maybe it wasn't Mike who was asking. Let's go take a look at, Mike is asking about the ES&A, because this is Mike, formerly of Sarasota, we get to say, because that's where he used to live, and now he's temporarily in Albania. How cool is that? He's asking about the ES Mini and the NQ. Now, we did take a look at the daily future contracts. I'll just pull those up on our screen. Your question was yesterday a key reversal bar? And the answer to that is no, not necessarily. You're asking about that as if that was the top. We already had the top. We had the TD9 count top that was in place out there, and that was the one that formed on July 28th. That was bar number 8, the bar following bar number 9, July 30th out there. So we already had a top in place, and price already was moving lower. Price was moving lower into a profile support, which was broken through yesterday, so really doesn't qualify as a key reversal bar. A key reversal bar would be on the NQ NQ out there. So the NQ did not have a top, but it's also a bearish engulfing candle. So typically I would say it's a key reversal when it doesn't form a Japanese candlestick type of candle out there. A key reversal bar requires three things. It requires you to be in an extended mode. Well, we've got a large A to B equals CD pattern on the upside. I mean, we're extended. Number two, you have to exceed the prior day's high and low. We did that yesterday inside the NQ. And number three, you have to close in the opposite direction of the trend. We had already started trending lower inside the ES Mini. We had not done that inside of the NQ. So yesterday was a key reversal, but Mike was also a bearish engulfing candle, and that confirmed a sell the D point top. If we take a look at the Dow Equity Future contract, still doesn't have a top, but it really does have a top from the standpoint of a profile change in trend. This will be day number 2 below that bottom of that profile out there. So, Mike, you were asking whether or not the ES or the NQ formed key reversal bars. It was really the NQ that did, but that was also a bearish engulfing candle. So I hope that helps you out. We wish the best of luck to you in Albania. Send us some pictures so I can share those with our tigers and tigresses. We come back to this break. Ann wants to look at UNG, the Sox, MSTU, and LTCN. Steve-O wants to look at Amazon. And I think that's about it. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So Ann would like to take a long trade inside of natural gas. So she's looking for a bottom. We look at the monthly time frame chart out here, and what we can see, and this is a September contract, and that is what is inside, entirely made up of the UN. The UNG is made up entirely of the September contract for natural gas. So when we take a look at it. Price is trading below profile support. We closed below profile support last month, and that brings open the price target of 284. So a longer term, 284 is the level to be looking at. The weekly chart is at $3.84, and that is a test so far of its breakout level. Has price gone down to test the bottom of its swing point from November? That swing point low is 2.97. We've been down to a low 2.972. We actually haven't tested the low. That's wild. So the weekly says patience. The daily's got no bottom pattern whatsoever. There are many A to B equals CDs. If I open up this chart here for the daily time frame, you're going to see at least a couple of them. There's one that's drawn in. There's smaller ones that are drawn in. We haven't even come close to hitting those targets here. I'll take the larger one. This is the larger one that we're looking at. And you can see that that would give you a price projection somewhere around $2.33 out there. So I don't see a bottom inside of natural gas. My suggestion is to go fishing someplace else out there, which is something that you're trying to do, because the next request that you have, and let me close these charts down, is to take a look at the semiconductor index. Now, you wanted me to look at SOXL. I'm not going to do that. I'm not because I'm trying to do something intentionally, other than intentionally help you. And when you use a triple, when you're trading a triple, you need to make your decisions off of the single. And the single, which I'll put up on my screen here, we'll put up the multi-time frame charts. Oh, that was the wrong set of multi-time frame charts. We're still going to put up the multi-time frame charts. Just Stevie's got to get to the right tab out there. And so that should be this one. And so as we take a look at the semiconductor index charts out here, for potential of a bottom. If we look at the monthly time frame, we know that resistance held, the TD9 count breakdown resistance, 240.47. We actually closed yesterday. In a moment, as these charts will be popular, I'll give it to you. We actually closed at 240.03. So we know that's acted as resistance. Well, support is being tested right now, and that's its green oscillator and change line. That's at 233. So we're kind of in no woman's zone at the moment on the monthly time frame chart. The weekly does not have a topping pattern, but we are trading below last week's low. This will be the second week to the downside. That in itself can be a bottom. But here, the real level of support would be either between 213.47 and 222.65. That's the buy zone. Or it could be up at 228.08, the current oscillator and change line. Because the weekly is trading below profile support at 238.85, I'm going to suggest that you wait, even if I were to find a bottoming signal on an intraday chart out there, because this is more likely suggesting that we get down to at least 230.46. So the number that we're going to first look at here, Ann, and that's not the number today, is 230.46. I do not see any intraday bottoming patterns out there, so we're just simply going to move on to your next request, which was to look for at MSTU. So let's go see at MSTU if we've got any kind of a bottom signal here. Give us a moment. We'll pull those charts up on our screen. MSTU is trading out at $7.19. It is negating a daily TD9 count bottom as we speak right now. Now, that may sound bad, and it typically is bad. However, price is also testing its breakout support at 720. We're trading at 719. If we close below 720, and 719 qualifies, but if we close below 1720, then what we're looking, chart's not showing, sorry. Screen share. Change stream. Thank you, Al. Appreciate that. Sorry about that. Knew I would screw that up. Was trying not to screw it up, but Stevie did. Okay, so here is MSTU. And what we can see on MSTU is you can see it's trading below its daily TD9 count bottom. I'll open this up, makes it a little bit easier. And trading into that TD9 count breakout level of support. I believe that was 7... 720. So if we close below 720, and we're also trading into a swing point here. MSTU is trading into a daily swing point from June 23rd, 33 million shares. We're moving into it with 28 million shares already. You got to let price get down. It may test that low. It may blow it away. That low being 690 out there. So no buy signal that we see on MSTU today. No reason for us to switch over to those other charts. And let's look at your next request, which is LTCN. So let's pull up those charts, see if we can help identify a bottom out there. And LTCN is trading out right now at $8.37. It is back inside its weekly profile. Not that it formed any kind of a top, but now that price is back inside that weekly profile, it may pull back to test the 614 to 744 level. The daily time frame is in bar number 6 of a TD9 count. It too is trading with inside its profile, and that has support at 791. My preference here, Ann, would be for this to go on and form a TD9 count bottom pattern. That could take place between Tuesday and Thursday of next week. So let's circle back on that, or continue to watch that to see if it continues with the pattern out there. And the monthly chart, there's not a whole lot of help for us on that. So, Ann, I hope that helped you out with all of those requests. Thanks so much for writing in, and we'll look forward to your next set of requests out there. Duncan Steve would like to take a look at Amazon. So let's go ahead and put Amazon into the multi-time frame set of charts out. It'll take an extra minute here to populate, but that's okay. Let's just see what we can see, if we can see anything that's worthwhile. What the Sam heck? Why is this blank? QMZN. Who the heck is that? Let's go with AMZN. There we go. So Amazon should populate our set of charts here momentarily. Give me a minute. You don't have a choice. I don't have a choice. I could tell you a joke if I were a good joke teller. I'm not a good joke teller. What I'm about to tell you next isn't much of a joke. It is pulled back, gap down to trade out at 215.53. So let's take a look at its monthly time frame. Monthly time frame, just a consolidation with inside profile, 169.79 to 242.52. You got a negated TD9 count top on the weekly time frame, so there's really no topping signal, I think. Let's open this back up. Steve-O. Was there this? Yeah, there's no way. That's more than a 0.786 retracement. I do not have a topping pattern. We got a key reversal bar. We got a bearish engulfing candle. What we do have is prices testing a swing point. That was a swing point from February 7th on a weekly basis, 244 million shares. We are testing it. We are rejecting it. And so far we have volume of 258 million shares. Steve-O. Obi-Wan is saying, hey, guess what, folks? Price will be back up there, that swing point. When you test a swing point with volume, you get back up there. Today's a test and rejection. That says we should at least get back to 228.06. Doesn't tell us when. The other charts, the daily chart, would probably help us out there. If we take a look at the daily time frame chart, what we have out here is a gap to the downside that confirms a Rhodes momentum indicator top. Price could pull all the way back, Steve-O, to the 201.70 level. That's its TD9 count breakout area. Let's look at the intraday charts. I do not see any. Oh, the only bottom signal is a 15-minute signal out here. You've got a TD9 count bottom. So, Steve, will take a snapshot of that chart there and just watch how Amazon performs. Can it clear 217.24, 219.23? Can it clear 223.21? Or does it just simply continue to move lower? I don't know the answer to that, but watch the 15-minute chart. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So George in Tampa. George, thanks for writing in. Wants to take a look at Harmony Gold. He's been in and he's been out. So let's get the message of the markets for Harmony Gold. Let's start with the longer term, the monthly time frame. What you'll see out here, George, is that prices trade above resistance. It's trading above its profile resistance at 1229 and the oscillator and change line at 1353. Now, I didn't want to say it doesn't have any resistance above that. It does. That resistance, because as a Rhodes Momentum Indicator top, would be the high of the April 25th high, and that is at 1877. So that's your real resistance level. But nonetheless, this is a bullish mode out here on the monthly time frame, being above those resistance levels. The weekly time frame, which has a Rhodes Momentum Indicator top, found support at the top of its profile, 1362. If it couldn't get busted to the downside, odds favor rallying up towards 1515, its weekly oscillator and change line. The daily time frame is just back inside its profile. It has resistance at 1452 and 1484. I don't have any kind of significant daily bottom or anything along those lines. It looks like when you look at the weekly chart, you can see just this sideways consolidation pattern that is in there. So that's in essence what it is doing. Now, there was a TD9 count top that formed at just a half an hour ago at 11:15. What should unfold, this price should pull back to at least test its oscillator and change line. That is currently printed at 1412. And what I can't recall is what you were actually asking for. I think you were in, you were out, and you're trying to get a feel for where things are headed. So I believe where things are headed to is up towards that 1516 level, but there's going to be a battle, 1452 and 1484 out there. So best of luck to you on your next decision. You did good on the last one. I'm sure you'll do great on this next one. Dan wants to take a look at GSAT. Let's put that one in here. I don't think I have that up on my screen just yet. And Dan is wondering, is today a TD9 count bottom, and is this a good buy? Well, if today is a TD9 count bottom pattern, we should see some intraday bottoming signals out here. And as the 15-minute time frame chart pops up, we could see a Rhodes Momentum Indicator bottom. The same on the 30. A TD9 count bottom on the 65, a TD9 count bottom on the 130, a getting back to the TD9 count breakout level and holding and perhaps forming a hammer candle at 2305 on the 195-minute chart, and the daily may form a hammer candle today with an, yes, you are correct, a TD9 count bottom pattern. What should unfold now is price should rally up towards the 25.77 level. That's going to be the bottom of its daily profile. On a weekly time frame, not that there was a top out there, but price in essence is trading with inside its profile. It got back close to, but not all the way to, the bottom of that profile at 22.17. You'd love to see this close the week above its green oscillator and change line. Doesn't need much more of a rally. 23.37 is the number. We're at 23.17. And on a monthly time frame, just being above the green oscillator and change line and within profile is a good thing. So your question, Dan, in New York City, is GSAT a buy? It most certainly is. But like any buy out there, make sure you use the proper position sizing and make sure you use a stop. I've given you the initial price target. That doesn't mean that's where it'll get to, and that doesn't mean that's where it will end. That just becomes that initial price target for GSAT. So we're going to ring the bell if we had a bell, and kudos for Dan in New York City for providing each of you with a potential trade. GSAT, everything looks good there. Lee writes in, and he's looking to go long URA. He's looking at more of a longer term trade than he is a shorter term trade, but we're still going to put it up in this set of charts out here to see what it is that we can find. So with regard to uranium, looks like it's trading out at about 38.19 or so. The monthly time frame looks bullish as prices above all resistance, its oscillator and change line, and top of its profile. The weekly time frame is generating a three-river evening star candle formation, but is that a top? Let's see if we can find some kind of pattern, and the answer is we cannot. Maybe I'll pull us back really far. Yeah, so I don't see a topping pattern. Doesn't mean that it hasn't topped. It just means I don't have one of my topping patterns. What we do know is that URA is going to end the week inside its profile, and it is came close to testing the buy zone. The buy zone is between 35.69, 36.89. We got down to a low of 37.04. That is on the weekly time frame chart. Let's go look at the daily. The daily time frame chart is pulled back to its breakout level of support after completing a TD9 count top. That was at 37.41. Now, if this is a bottom, and it could be a bottom, and you can see profile support, the buy zone is between 36.42 and 36.87. Do we have bottoms on the intraday charts? Much like when we just took a look at the charts for Dan. Well, turns out on the 195-minute chart, you've got a TD9 count pattern that is forming out here. That says that by the end of the day, you will have a TD9 count completed for the 195-minute time frame. We do not see a bottoming pattern yet for the 130. We have a TD9 count bottom for the 65-minute chart, nothing on the 30, and nothing on the 15. So we've got some inklings that URA is forming potentially forming a bottom as we speak. It's not as solid as GSAT, but it's pretty solidly. So you're trying to form a longer term trade here. I would say go ahead and start or add to your position at this stage here. And if we close below 36.42, figure out the 10-day average true range out there and then multiply that times, say, 1.618 to figure out your stop size. That stop size hopefully takes you below 36.42. That's the bottom of that bullish structured daily profile. So there's potential there. And now the question is, will that turn into something? So I think you've got reasons to go ahead and take that trade. Now, on the 65-minute chart, you're looking for price to rally up towards 39.07. If it can close above that, then you can get up to the 10.57 mark. That is ticker symbol URA, and that was for LB. I'm going to check the phone, see if there's any other requests. I believe I have gone through everything. Nope, here's another one from Mimi. Thank you, Mimi, for writing in. Mimi wants to take a look. We're just going to put those on this set of screens here, SCHD. And Mimi's question is, please view SCHD, a buy point for a long position out here. And SCHD is testing the bottom of its daily bullish structured profile zone as we speak right now. They're between 26.28 and 26.41. Now, there's no bottom pattern there. There is an A to B equals CD to the downside. We'd like to see a bullish reversal candle. That's what we'd like to see. The monthly time frame shows that we're trading below profile support. So that's never a good thing. The weekly time frame shows that we're trading below profile support and its red oscillator and change line. That's not a good thing. That could open up a price move back to 25.41. The monthly chart could open up a price move back to 24.01. So even though the daily has found support in its buy zone, at least as of 11:49, we're not going yet with that is a bottom. 195-minute chart definitely is a bottom. I take that back. So it negated its TD9 count bottom pattern, but found support at its breakout level, 26.28. Could be a bottom. No bottom signal on the 130. We negated a TD9 count pattern. I'm going to say, look at all these negated signals. I'm going to say, be patient. Let's come back and look at this. Should it get down towards 2607 to 2541, 2401 level out there? So, Mimi, I don't think that, and if we miss the buy point because they sit in the buy zone, then so be it. But I don't see it right now. So, hope that helps you out. Mimi, good to hear from you. Thanks as always. And I believe we've got through all of the requests. Maybe Stevie can go get to the practice range a little early. What do you think? Should we take off a tad early? Nah. We'll come back. I'll find something to look at. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Cool. We're going to end end the show. Well, maybe not completely end it, but we're going to take a look at ticker symbol GOLF. I wasn't aware of this. This is courtesy of Duncan Steve inside the Tiger's Den. These guys are the manufacturer products for Titleist golf equipment, FootJoy, golfwear, and other things. Golf is trading out at 77.33. Steve-O, it is trading above the profile resistance and oscillator and change line resistance on the monthly time frame, signaling to you and I, and it negated a Rhodes momentum indicator top last month. This looks like it wants to head higher. The weekly time frame, not so good, but no topping pattern or anything. A price could still pull back to 75.44, and it would still have its momentum. The daily time frame, we've got a profile change in trend today as we have 2 consecutive closes below 80.13. This suggests our price could pull back to 72.39. So go with 72.39 to 75.44 to 74.39 as the price area where golf is likely to pull back to. Its 195-minute time frame chart is in bar number 8 of a TD9 count, but and that could form a TD9 count bottom pattern by the end of. Could complete it at today's end, and then at around and then on Monday by 2 o'clock. On the 30-minute time frame, no bottom signal, none on the 65, nothing on the 30, and nothing that sticks out to me on the 15-minute time frame chart. So thanks for blanks and giggles out there to take a look at golf, but I don't see a bottom pattern out there, but might be worth taking a look at around 72.39. Let's end the show by taking a look at the NQs out here. So let's go see what they're doing. As we talked about earlier, the 60-minute time frame charts were the one to watch. Here, the 60-minute time frame chart in the NQ is rallying towards its oscillator and change line. The odds of it hitting that are pretty high out there. When Polar was alive, rest in peace there, David. We did quite a few studies on this, and it's the probability percentage is way up there. So 23,031-ish is where it's targeting. Watch 23,060, 23,119, 23,207 should it continue to rally. Watch that spot VIX index. Does it close higher by more than plus 10% today? If it does, look for bottoming signals on the 30-minute time frame charts. And if you do, that's your signal that a rally is about to unfold. Folks, have a fantastic Friday, a wonderful weekend, and I'll look forward to seeing you on Magical Monday. Be safe out there. Take care.